All right, hello and welcome to Camel Finance. I'm your boy Camel, and it's Friday.
'Cause it's Friday.
The song pretty much remains the same at this moment in time. I am very bullish into year end. Very, very bullish. But I said be careful short term over the next 2 to 3 weeks because any bounce is likely to be counter trend until the cycle lows show up around the 18th of October. Patience until then. And that seems to be the case. Now, can things change? Yes. Have I shown you where they could change in yesterday's updated video? Yes. But like I said, the song remains the same. I still pretty much think that, yeah, we're a couple of days past this candle at this current moment in time. But the 40-day cycle is the 40-day cycle. They are inside the 40-day window, plus or minus a couple of days either side. 80% of the time, remember, these cycles fall inside of the stipulated window 80% of the time. So the odds are stacked in our favor that we are going to get another low. It doesn't have to be as low down as this, right? But it seems to me that we will probably get something like this play out. I believe we're in this phase right now where we're getting that counter trend bounce before the final drive lower. Once we've had the final drive, we'll probably be able to set a trend line and look to either get long on a breakout or, of course, we could buy a swing low if it's perfectly within that timing window. So that is pretty much the situation. Like I said a bunch of times already. And the dollar is in this neighborhood now where we would kind of expect to see it top. If it's going to top, then it would be anticipated that it tops in the next week or two. And I can't tell you over my career the number of times I've seen a dollar cycle top as a stock market cycle bottoms. So for this to play out, for us to end up somewhere in this neighborhood, to print a swing low and go right at the same time that the dollar does something like this and then breaks down. I have seen this play out dozens of times before, maybe even more than dozens, maybe hundreds of times before. So I honestly think this is perfectly within the realm of expectation, particularly pertaining to cycle theory. Just before we get to this next slide, I wanted to point out a couple of things, I wanted to mention a couple of things. I actually think this current strength in the dollar speaks to blow-ups in the other forexes, okay? I think this speaks to primarily euro and pound weakness. That's what I think this speaks to, rather than a major risk-off moment. And the reason for that is simple. Oil is elevated, right? Gold is holding up pretty well. And yet, the dollar is printing absolutely nothing but up-only mode, right? From my perspective, I think this speaks more to FX weakness than it does to dollar strength. And that is yet another reason why I'm not really sweating this move. And apparently Bob Lucas isn't either, right? Bob Lucas, you can see, still calling for this. So will we get it, won't we? Speaking of currency weakness, this is the global currency 10-year percent change versus the dollar, okay? And I'm not going to spend too much time here, but if you pause your screen and have a good look through this, you can see the absolute state of the FX market, right? All of this printing that the dollar has done, of course, is exported as inflation to other currencies. It forces them to debase and devalue their currencies. And this is the net result over a decade, right? Pretty severe. I'll be honest, I am kind of struggling at the moment to find content on Twitter for you guys. And you can kind of tell that I'm not the only one, right? If you look around at the other crypto influencers and the YouTubers, mostly people are posting about ETF and SEC stuff and BitBoy, the whole BitBoy drama. Now, we don't really do that kind of thing here. I try to find as much alpha as possible. I try to provide you with something of value. And if you want to go and watch that for entertainment purposes, of course, do that, right? But it's just not in my nature to be watching dramas unfold or commentating on dramas and stuff like that. So I've done what I can. Anyway, this is what I could find so far. Coinbase has got an approval to offer perpetual Bitcoin futures to global retail customers. Coinbase is apparently aiming to become a derivatives provider as well. The luxury car maker Bugatti is officially launching Bitcoin ordinals collections. So, I mean, it is what it is, right? It's more money on the network, I guess. The big news of yesterday was the SEC further delayed BlackRock spot Bitcoin ETF. But I found this from Raoul Paul, and he said that he thinks it's likely to do with the CFTC needing approval as part of the process, which hasn't been signed off yet. So Raoul Paul is much more positive about this whole thing. He obviously would know, I think, better than most people. And perhaps it isn't a case of them trying to slow this thing down as much as possible. Perhaps it's just there's a whole heap of signatures that are needed on the paperwork and they take time. If anyone's ever worked in a corporation, then you'll probably know how this goes, right? I can certainly, if I cast my mind back to the pharmaceutical industry days, I can certainly remember the times when I used to write a document and then it would take a week and a half for me to run it around and collect signatures on it, right? A week and a half because everyone likes to read it and then everyone likes to say, oh, no, I want you to change this. And no one can just put a signature on a paperwork, right? Everyone has to at least make one change to it, even if it's minor and irrelevant, just to prove that they actually read the document. So I kind of understand this. And I think if anyone's ever worked for a corporation, you'll understand this too, right? Things just take time sometimes. So maybe that's what this is. The charts are quietly getting better. Look at this from the dollar, right? Run the level we talked about, and now working on the next thing that we talked about, which is a potential breakdown of this upward sloping pink support line. So it hasn't done it yet, and we certainly could see a bounce and a resumption of this uptrend. But eyes on the prize here. If we get a breakdown, then you know what comes next, right? 10-year yield not showing any sign of slowing down, but early warning signs would probably come from a break here. Okay, this would be an early warning sign, and then this deviation perhaps would be a lot bigger than I thought it would be. But get below this pink horizontal, and again, we could see a big risk on moment in the stock market into the end of the year. I still remain very, very bullish, despite being cautious in the near term. As I mentioned earlier, look, gold is holding up relatively well, isn't it? Okay, gold is holding up relatively well given the strength in the dollar, and it kind of speaks to that whole FX weakness I was talking about. Remember, the euro makes up a big chunk of the basket, 56, 57, 58%, somewhere around that neighborhood, and it's yet to break out. But if it can do that, and it should do pretty soon, then of course the dollar's going to roll over. And gold seems to know this, right? Because you would expect, from the time the dollar started rallying, you would expect something like this out of gold, I would have thought. And we just haven't done that, right? We're nowhere near these lows, are we? So gold is holding up pretty well. And we're also seeing that with oil as well, right? Oil is holding up way, way, way better than I thought it would, personally. Now, I'm still pushing this short, and until we're stopped out, then we're right on it. And it is what it is. But undeniably, this is massive upside momentum for oil. And again, if the Dixie was truly in a risk-off situation, if it was truly pressuring other commodities, then you would see this sell-off much sharper than it has done, right? And the fact oil is holding up, again, it kind of speaks to that FX weakness, in my opinion, anyway. The only other trade I got open at the moment is the FTSE 100. I was talking about closing it if we closed daily candles below the yellow. We didn't, as you can see, we've wicked it, and now we're bouncing off. So long and strong continue to push there. And for the rest of the charts, like I said in yesterday's update, we're still kind of expecting to see counter trend followed by an undercut and a go out of that undercut and the cycle low. We'll be looking to get long. I'll also be adding the NASDAQ. The Dow, my focus is here on this downsloping red resistance line. So we'll see. Undeniably, small caps thinking about making a first repair, but I would kind of expect this to do something like this before it goes. So looking to add small caps, although not yet added them back. And of course, saving the best till last, here's Bitcoin. So for me, it needs to actually trigger a buy. It needs to clear the prior high, this high from back here. Okay, that's where it needs to clear for me to be like, okay, yeah, this is a real breakout and not just some kind of move that's about to be faded into that cycle low. So my primary expectation is we are still going to get that cycle low, and the crypto-related equities have not yet started to confirm this either, right? So yesterday, look, rejection at resistance, and I was saying in yesterday's update, does that mean we got to roll over and make that low around the time the 60-day cycle low is due and around the time the stock market cycle low is due? That would be perfectly reasonable. But again, if we start closing daily candles outside, then I will start adding these positions back, and that will likely give a lot more merit to this breakout right here being for real and being about to take out the prior swing high. So it is what it is. Eyes on the prize. I don't like to take positions on Friday, but I could see myself potentially adding one or two of these back today. And of course, if I do, then the stop, as always, will go below the local swing low, and we'll buy it into the close as it closes a daily candle outside the trend line. The cycle tells me we get rejected here, even if there's some early trap where we do this and then reverse today and go down. But like I said, open to anything, open to being proven wrong. I think Riot's got a bunch of work to do, and Marathon also has a bunch of work to do, but that trend line right there in red is really clean. So get out of that, and again, stock will go below the swing low, and you know the deal from there, right? So overall, I'll finish as I started today, I think. That we are bullish into the end of the year. That's my opinion, and I'm sticking with it. I really think that the end of the year is going to be very, 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 very bullish for Bitcoin and for the stock market. But be careful short term, okay? Any bounce that we see is likely to be counter trend until those cycle lows show up around the 18th of October. So patience until then. That is my strategy. Once we get to those cycle lows, as I keep saying, then it will be time to start adding some positions. And of course, if we start to get early breakouts, then it will also be time to consider adding positions. But remember, assuming we did get a breakout here, right? Assuming we got a breakout and it does something like this, there's still a chance that we drop into a cycle low around the same time as Bitcoin, and then we go like that. And for me personally, getting in at the cycle lows on a swing is a much higher probability setup, even though I might be paying a higher price than if it was to come down here, right? So I'm willing to give up this little bit of profit for a higher probability setup rather than to go chasing the market higher and higher and higher. So that's it from me. It's Friday, of course. So have a great weekend. And until next time, take care from me. All the best. Cheers. Bye.